history of silver without looking at the chart. If you look at the chart of silver, you will see that way back 1970, silver was on a flat note, 1.32533 per ounce. And during this era was when we considered as a gold standard. But something dramatic happened. In August 1971, President Nixon ended the dollar convertibility into gold, which we considered as a Nixon shock. And that technically put gold into a free market, free float, and silver at the same time picked up. So you could see when silver and gold went on a free float, you have seen that the price of silver and gold started rising. They all move at the same time. The same way silver was moving from 1971 after the President Nixon end of a dollar convertibility, we started seeing silver and gold uprising. And that is the structure of the market. And so far, you see after price rose sharply by um, mid 1980, you begin to see a drop in price. And shortly after that, market created a structure on a monthly time frame, which you can also see on a monthly line chart. You see price create here as a supply roof and a break of structure, price returns here, broke the demand floor, create an ascending trend line. Now the market begins. It is after this time the silver market has created a very strong structure for traders to come in and take advantage, and we'll start having series of retest slash resistance become support on break of structure from 94 we had it to 98, we had it to 2003, break of structure, price returns here on demand 2008 during a global financial system. And we have seen price return back by 2020. That was the final call for silver rally, and you can see what happened here. So you can see after that push, silver has gone. But one thing to talk about silver market is that we cannot ignore the rise of silver without looking into the history. You see, the history of silver market rising from 1970 to 1980, it's not a coincidence. It's based on change in monetary policy. Just one government decree. All this started from the then president, Nixon. It was considered as a Nixon shock. So silver dramatic climb from 1970 into 80. You can see it from the chart here. It's a combination of a monetary policy change and inflation, geopolitical shock, and broader investors' sentiment and aggressive accumulation by two brothers, the Hunt brothers. A lot of people may not know the Hunt brothers. The Hunt brothers, they inherited fortune from their father, who was a Texas billionaire. So, approximate price paths, which everyone needs to know. When you look at the price from 1971, price was at flat zero, 1.2939 per ounce, and price rose by 1974, trading at 5.46823, and retraced, and price took another parabolic move to 34,52673. And if you take away the line chart, price rose up to 57, up to $50, right? We had it about 47.38772. So it continues to, play around, and that is what it is. And by January 1980, price peak up to, you can see it up to 49. You can see the price there, price surge up to 49 approximately. So key factors to, you know, know that have led to this growth. We look at the end of the gold standard, that is free floating era. So we can see in August 1971, President Nixon ended the dollar convertibility into gold, the Nixon shock. Silver had already been largely demonetized in US coinage. The Coinage Act in 1965 removed most silver from circulating coin. Silver certificate redemption ended in 1968. Once precious metal floated freely, silver became a pure market commodity and a monetary hedge. The way people buy gold for hedge, people also buy silver for hedge. I'm talking of physical gold and physical silver. That's what we are talking about here. So it's what the structure tells you, and we see price move back again and return by 2011, and we begin to see another drop again in price. Another thing again that led to the factor is the high inflation and the dollar weakness. These are two major macro backdrops. By 1970, we have seen a persistent inflation, inflation picking up to 14% in US. Oil shock in 1973, embargo in 1979, Iran revolution spike, you know, stagnant growth, that's stagflation, and weakening dollar. Investors sought a hard asset. They want something tangible. Gold came in, silver came in. Investors begin to stack up. They want to save. And we've seen at the same time gold also rose up to 850 in January 1980, moving a decade from 1970 to 1980. You can see the sharp from $35 into 850. That was over, I mean, it made a whole lot of investors, commodity investors, millionaires and billionaires as at that time. Broad investors, speculative demand, the risk appetite increased. Investment demand for silver surged as inflation hedge and alternative to paper currency. People start to lose more confidence in fiat money. They needed something tangible to save. And that's what it is. And the next one, which is very important for everyone and in the history of silver, is to know is the Hunt brothers. They were extreme accumulators. You see, Nelson Bunker Hunt and William Herbert Hunt, these are sons of a Texas billionaire. They are heirs. They inherited this money from their father. They began buying silver in the early to mid 1970s as an inflation hedge. They didn't have trust in fiat money. So they continued to buy. They escalated aggressive buying into 1979. The Nelson Bunker Hunt and William Herbert Hunt, the two brothers, became very aggressive in buying because they didn't trust fiat money. Just like today, you see fiat money is failing. The Fed keep printing money, keep printing money, keep printing money, and they continue to suppress inflation. They accumulated a large amount of physical silver. And the beauty about the Hunt brothers is that they were going in for physical silver. They didn't want those paper sheet kind of things. They were looking for physical delivery. It was estimated that they had over 100 million to 200 million ounces of physical silver delivered to them. So they frequently took silver delivery, physical, and the most important thing, they were moving them to Switzerland. So these guys were so powerful that they at the point they brought in some partners from Middle East, to come invest, and they started borrowing money against rising holdings to buy more silver, and they continue to collect physical silver delivery, mopping up physical silver from the vault and exporting it to Switzerland. So it was a thing of concern. At the height of this, the whole world were like, what's going on? Because majority of this were going to one man, and their buying created a classic squeeze that amplified the broader bull market into a parabolic spike in the late 1978, moving into 1980. They contributed. It wasn't just only, geopolitics and inflation. The Hunt brothers contributed significantly. Now let's look at how the whole thing ended. Because for every rise, there will be a down, and of course, you can't beat the government. The end of the rally here comes. In the January 1980 exchange CUMIX imposed Silver Rule 7. Just one simple rule is what's going to turn your fortune around. The Silver Rule 7 restricted trading to liquidation only. You could only sell, you're not going to buy. This cut off the Hunt's ability to keep expanding leverage long position. On March 27, 1980, Silver Thursday, a very remarkable day, the Hunt failed to meet a large margin call. Silver collapsed. You can look at the structure, look at the collapse. You can see the collapse, a drastic drop into $10. That is what it is. That is what it is. The price fell 50% in a single day. So the brothers suffered enormous loss and later faced legal consequences for market manipulation. They tried to play the market. They will run out of cash. Even banks offered to help them loan them money, but You can't beat government. You can't beat government. So that is what it is. It's not just only one factor that caused it. The Hunt brothers contributed due to their appetite for physical silver delivery, and we have seen the price continued, and price came back up to 4 point something by 2003, and we have seen price return into area of demand again. And you can see the structure there. The structure of market never lies. I always say it. I say it repeatedly. Market structure never lies. You can see price after price broke a supply roof, came back here, demand floor, and price returned by 2002 to retest the demand floor, and we have seen a parabolic move in the price of silver again. Silver have rallied and create an ascending trend line as a pathway for demand, and price returned here in 2008 during the time of depression, returned back, broke the structure, a broken ascending trend line became a supply roof, and we have seen a correction back into $11, and it was in 2020 that we have seen another move on ascending trend line. A broken demand floor became a supply roof. RTRS1, RTRS2, RTRS3, break of structure, RTSR1, RTSR2, final buy call. And we have seen silver move parabolic. A return back to retest the ascending trend line that broke out in 2013, 2014, and retested, and you have seen silver is pulling back into demand. And if you look from your line chart, you will see here creating first RS1, RS2, break of RS structure, price returns here. A broken two resistance structure one, resistance structure two, break of structure, price returns here, retest. So technically, I see a buyback in silver. If price break out from this structure, then price will return into May 21 breakout level. In May 21, we create a very strong structure. If you look at it from your line chart, you will see price create here. Support structure, break of a support structure, return here as a supply roof, break of a supply roof, follow here by a demand. So if price comes back here around $28 per ounce, silver, we could see a very strong rally. So that is the history of silver. Silver and gold has remained hedged, and it will continue to be the only money that you should keep if you have enough money. Go buy physical silver, physical gold, buy for now.